SA's industrial property market remains the best placed major commercial property type. House prices come under renewed pressure while apartment rentals are showing an opposite trend. GROWTHPOINT asks its shareholders to approve a 250 million rand BEE empowerment scheme. Welcome to another episode of Property News. I'm your host, Manel Khuzwayo. Our top property stories for this week are: Cape Town calls for public comment on drafting of the LSDF for one of the city's largest parcel of vacant land. Then next, we look at the state of South Africa's property market in Q2 of 2023. So we look at the residential, commercial side of things. And then lastly, for our last story, we look at GROWTHPOINT proposes a 250 million rand B-BBEE ownership scheme in support of its CSI initiatives. In our first story for today, we look at Cape Town calls for public comment on the drafting of the LSDF for one of the city's largest parcel of vacant land available. So the city is preparing for the local spatial development framework, which is the LSDF, for the neighborhood plan of Gordons Bay development area in the Heidelberg district in the Western Cape. So it's one of the biggest parcels of vacant land still vacant within the borders of the city. So the vacant land is underdeveloped and is situated on the coastal town between the existing N2 highway and just east of the Sololi Road Pass. The area has a lot of development potential and includes Flak Plus, where the city would develop housing as well as fairlands. So apart from the development pressure scheming for population growth in the area, the intended LSD must take into account the upgrade of Sir Lowry's Pass River corridor and Sunrail intentions to realign a section of the N2 highway to free the borders of the area. The city's view is that there's much needed development in the area to keep up with the population growth demand of the area. So this is managed in a sustainable manner that promotes and protects unique characteristics of the area. The municipality is calling for residents and businesses and affected party to register as part of the voting process. So there's a public voting process that's going to happen at Strand Town Hall, taking place between 5:30 and 7:30 on the 19th of July 2023, whereby it will present the LSDF initiative, its intention, and the purpose. For people that want to get more information, you can email gdbsalsfd@capetown.gov or visit the sub-council's office, or you can go online to get more information. So in our next story, we look at the state of South African property market for Q2 of 2023. South Africa's industrial property remains the best placed major commercial property type, but also sees signs of slowing down, such as weaker rentals and stand value growth, according to Reuters report on the property market for Q2 of 2023. This was expected, especially with the economy currently in South Africa and the pressure of manufacturing and the retail sector, and also the electricity crisis, which is negatively affecting rentals in that industry. So when you look at the retail property, it made a strong comeback in 2022, but is under pressure with the latest demonstrated weaker retail sales that you've seen recently and higher mall vacancies, which reflect on the higher capitalization rate for regional shopping centers. However, the office property market remains a place where there is slow but there's rising vacancies happening in the area. We'll go more into detail with regards to what's happening in the office market. And then house prices have also come under renewed pressure, while apartment rentals are showing an opposite trend. So in our first story, we're going to look at the industrial part of what the property market has got for us. So the results on Reuters Q2, a survey shows that industrial property is the best place of the three major commercial property types, with relatively higher rental growth and low vacancies. However, the market is starting to slow down as there's weaker rental and stand value growth and lower building activity. Nominal gross industry market for space is about 500 square meters, grew by 4.1% in Q2 compared to Q2 of 2023. So this is Q2 of 2023. This is lower than 5.1% year-on-year growth recorded in Q1 of 2023, and that was the second consecutive quarter of weak growth. It comes as a surprise as industrial vacancy remains low, even though there was a further decline in Q2 of 2023 to an average of 3.9% on the national average. Perhaps landlords have kept vacancies low at the expense of rentals, as reversion rates on new leases have been negative for most REITs. Contractual rentals have also escalated by more than the market rentals. It could also be that landlords have decided not to be too hard on tenants due to the extra money they need to fork out for power, such as diesel for generators. GROWTHPOINT, SA's largest REIT, says load shedding severely affects manufacturing, and the rising costs of load shedding and straining on occupancy is affecting the affordability and contribution to tenants' failure to pay rentals. And that's is what we have in terms of the industrial side. And then I'm going to have a quick look at what the office space in terms of South Africa has. So office space market remains the worst of the three major commercial property types. This is due to an oversupply in the market. Encouragingly, Reuters Q2 report of 2023 data continues to point an improvement in vacancy rates, while a nominal market rental growth remains in positive territory. The REIT is still generally reporting large negative office rental reversions, as contractual rentals have escalated by much more than market rentals. The office market is clouded by poor economy and remote working trends. However, the momentum seems to be shifting towards returning to the office in large corporations. That said, the hybrid working policy for companies these days are 3 working days in the office, which remains a popular choice, which means there's less demand for office space pre-COVID levels. Nationally, the rental growth of decentralized A grade has increased by 3.5% in nominal terms, and then in Q2 of 2023 compared to Q2 of 2022. This comes after a 3.2% year-on-year in Q1 2023, which shows that the nominal rentals have bottomed out after failing sharply to return post the pandemic. But to give perspective, the second quarter of the nominal rate is at a national level that was at 3%, still below 2019 levels. Regionally, Cape Town has been a clear top performer again, with over, because the few past quarters, they've had several dips of about 10% in 2021. However, the nominal A-grade rentals increased by 13% in decentralized nodes in the mother city compared to a year earlier. And then in Pretoria, these grew by 3.6% and 1.6% in Johannesburg. In real terms, only Cape Town managed to reach above inflation rental growth compared to a year ago. So Durban decentralized rentals fell by 1.1%. the second consecutive year-on-year decline, but some nodes like Lelusha, Umhlanga still performed very well. The results of the Reuters office vacancy show that the vacancies in South Africa improved further in Q2 of 2023, with the average vacancies of A+, A grade and B grade space combined to about 14.5% in Q2 of 2023, lower than 14.9% in Q1 of 2023. Largely thanks to Cape Town and lesser what Johannesburg office market has had to contribute on this market. Then we look lastly at the residential market. The housing market continues to slow down to lower levels, with effective demand for property weakening because of the economy and higher cost of living and rising interest rates. Nominal price grew by 1.9% in May 2023 compared to May 2022, the slowest growth since July 2020, based on FNB data. So prices grew by 2.3% in the first 5 months of 2023 compared to the same period in 2022. This indicates a slowdown from a mini boom during the pandemic, when prime interest rates fell to as low as 7%. In real terms, house prices in the first 5 months of 2023 fell sharply after deducting the consumer inflation CPI rate of 6.8%. Interest rate hikes started to affect house prices and sales more materially in Q2 of 2023, especially in Gauteng area. So the impact thereof is not over. More sales have occurred due to owners experiencing rising financial pressure. That's what we've seen so far in terms of the residential market. Then when we look at flats, the vacancy, the national level is at 6.9% in Q2 of 2023, unchanged from Q1 of 2023. And then that is according to Reuters residential survey data. This is better than the 8.3% average of 2022. However, vacancy rates are still slightly above at 5.3%, average recorded over 3 years from 2017 on to 2019, that is preceding the pandemic. The improvements in the national vacancy since 2021 has supported flats rental growth. Official data from Stats SA, however, shows that there is a nominal flat rentals in South Africa in Q1 of 2023 increased by 2% compared to a year ago earlier, in line with the 1.9% growth in the fourth quarter. Prop data also shows that the nominal national rental growth also lifted to even higher at 4.2% in Q1 of 2023, and the fastest since Q4 of 2017. However, the reduced affordability is negatively affecting the sales of flats, which several brokers have reported a quiet market. In all, house prices and rentals are still declining in real terms in most parts of the country. In our last story for today, we look at GROWTHPOINT proposes a 250 million rand B-BBEE ownership scheme in support of its CSI initiatives. So GROWTHPOINT Properties asked its shareholders to approve a 250 million rand broad-based black economic empowerment scheme for a majority empowerment of transaction that will continue to fund their flagship corporate social investment initiatives that the REIT supports. The proposed transaction will see GROWTHPOINT allocate shares to Special Purpose CSI Trust, which would use dividends from its GROWTHPOINT shares to fund future CSI initiatives that focus on education, entrepreneurship, enterprise development, action through its Property Point, which delivers programs such as growing small black businesses in the property sector, and educational projects such as the Grow Smart, which assists primary school learners in the Western and Eastern Cape. So Sean Tinius from GROWTHPOINT, head of transformation and corporate social, says the proposed GROWTHPOINT CSI Trust will become a valuable source of perpetual funding for our social impact projects. It will also enhance our B-BBEE credentials by helping achieve our equity owners target in line with the property sector code. Finalizing the B-BBEE deal would see an increase in broad-based element of the property sector charter scorecard for black ownership of GROWTHPOINT. GROWTHPOINT is a level 1 BE contributor. An extraordinary general meeting will be held on Wednesday on the 19th of July 2023, shareholders to consider the proposed scheme, which includes into a loan agreement with GROWTHPOINT CSI Trust to enable it to acquire 250 million rand of GROWTHPOINT ordinary shares, valued at a share price of 12 rand and 50 cents, less than the 0.6% of the total GROWTHPOINT ordinary shares on issue, together with their full voting rights and dividend elements on the same basis as all other GROWTHPOINT ordinary shares. The GROWTHPOINT CSI Trust will be structured to comply with both the B-BBEE Act and the requirements of the Public Benefit Organization. Besides shareholder approval as a major B-BBEE transaction, the scheme also needs the green light from South Africa's B-BBEE Commission. And that's our story for this week, and see you again next time. Cheers.